The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, and this is a pre-opening show. I'm doing it at 8 a.m., an hour and a half before the market opens. I have an appointment, and I probably will not be back in time for ribbon cutting, actually, and I won't be back in. I don't think I'll make it. I don't want to rush. So I'm taping the show, and we'll replay it at my time, 12 o'clock Eastern, on this 14th day of September. So what are we looking at? We're looking at gold down for 1323. I've got a peak E in the Chapman wave. It's really in a sell signal, very close to sell mode. The weekly chart is at a D. And let me just get out of this for the moment. I want to go to the monthly just to show you something. Right there, okay. And the monthly chart is good action, but it's really not great action yet. I think that's going to come probably later in the year as this cup formation forms. It really needed in this move, and I don't think it's going to do it, this move being in September, to scream about 1400, actually 1403, to start a new leg to the upside, an official leg, after that huge move that started back in December of 2015, going from the 10,000, what was it, 888, 10,075, 1,075, all the way to the 1,400 level in one swoop to the upside. Now it's consolidating. It should get to that point, and I think it's just going to take time, stair-step move. So gold is retracing right now. My contention for my subscribers to my opening call has been for the past week that we should see gold pull back with silver. Silver right now trading at 17.73, down 0.13. Having made a peak E, I haven't yet got the signal to put the down arrow. It'll be probably by the end of the day. We'll see. Weekly chart is good, but not great. Just a very strong move that needs to consolidate. We'll see how the 17.35 area holds. That's going to be important for the 9-period moving average in the weekly, for the 200 period and the 200 period exponential and simple moving average in the daily. So that's going to be the issue. You've also got the monthly chart, which has strong resistance at 18.25. So it's just kind of chop, chop, chop for a little while. And as we do that, we're looking at the dollar. This is very interesting because the dollar has gone from the 91.01 low of the 8th of September. It had a spike to the upside and then stopped dead at the 9-period moving average, a little doji candle. Then a spike up yesterday, and today's got another little doji. Is that the pattern? Well, not if you're looking at the USD JPY, which was really, for me, very influential in us, in my subscribers, going long the dollar, because the USD JPY has really a continuous string of green bars since the low that was made right there at 107.31 on the 8th of September, trading out 110.71, up 0.23 on the day. So the dollar is yesterday, actually for about 3 days, it's played catch up to the stronger dollar, US dollar, Japanese yen currency pair. Let's think that the yen is just going higher. And if you look at the EUR USD, it looks very much USD. It looks very much like that. I'm pretty sure there's going to be a peak E and not an alternate count C. And you can see the MACD didn't confirm the rally at all. The stochastic didn't confirm this last rally at all. So the euro is down just a little bit. It's at 1.188. And my suspicion is that it too, like the others, and let me add, the TLT looks exactly the same, which is and now I can put a down arrow in it. The TLT is in a short-term sell mode in the daily chart. It is in the weekly chart, it's just consolidating a big gain after really a cup and a handle breakout that didn't hold. And the whole thing about this ugly bar of the 11th of November at 131.21 high, 121.65 low, once you get into the middle of that candle, you should work your way towards the top part, and you couldn't go to 131.21. Instead, it went to 129.57. So there it's showing tremendous strength in the technicals and not all that much strength in the actual price. Euro weekly, PG, let me just see, EUR, USD. Yeah, it's an alternate account. Z in the Den, I'm guessing that it's worked so many times lately in all different spheres that we're looking at, oh, wait a minute, where did it go? Let me just move this away. This is the rectangle that it broke out of. We'll show you another rectangle in a minute. Let me just get this away. This is very interesting. So remove. Okay, you see there's a Chapman wave instant restart. My guess is that that is going to remain an instant restart, and that is really an alternate account C in the euro-dollar currency pair. But I'm not ruling out that it isn't a G, because Gs occur when you pull back, when you, whatever it is you're following, and the MACD is held beautifully all the way through to the F and then the G. So I can't rule it out. The stochastic is pulling back, but still strong at 86%. I'm just saying there is support at 1.179, and there is very strong 200-period moving average support at 1.16. So if it's, I'm thinking a 1 week to 2 week further a rally in the dollar as gold and the euro and bonds pull back, yields go up. That's what I'm thinking right now. But just to be safe, what I am looking at is that the characteristic of the difference between an instant restart in the Chapman wave at a peak D, that fourth highest peak, that takes you to another D or even an E, gets negated somewhat if it goes to a G and the MACD is being very strong all the way. Because at that point, the MACD has kind of run out of energy, and we'll see what happens. So I'm keeping an alternate account. We're not trading it, so I'm just treating it as an analysis. And it's a single leg A up in the monthly chart, but this A has veracity. The stochastics are 90% in the monthly of the euro dollar currency pair, and the MACD is still very strong. So that 200-period moving average of 1.218 is both a magnet and a repellent line at this particular time. Hope I clarified that. Let's go to crude oil. We're going to go to the indices in a moment. Remember, this is pre-open. This is now 4 hours prior to what you'll be hearing when you hear the replay later on. Look at this strong leg B. And that leg, I'm calling it a B for now. When it goes above the continuous contract goes above 50, if it does, above 50.58, I have to say it's a D / whatever the letter is. But if it does it, you've gone to a leg C in the weekly chart, and that is a positive, and that starts the pattern that we saw in the euro dollar, where it made that lowercase h that goes to a lowercase m and then breaks to the upside. So crude oil, I changed my opinion last week. I said I think crude oil is actually acting very much better. It has the USO, which is the United States Oil Fund, needs to see this resistance taken out. It's been taken out today, 10.07. The day has barely begun. We have to wait. But I'm saying that if I mentioned that if the USO can get to 10.12, then that 10.24 200-period moving average resistance becomes a magnet. So crude oil is acting very well right now from subscribers. We have a commodity index that has quite a nice weighting in the crude oil, so that's been helping that index very nicely. We will look at question about, will I look at the XLF, etc. I certainly will. Basil Chapman, the Dow futures are down 3 in the S&P, down -4 in the Dow, and I'll be right back.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I didn't mention, but I wanted to, is that high-grade copper gave a sell signal as well. I spoke about that last week. I said I believe copper has made a significant daily top. I'm not sure yet about the weekly, but it is a peak E, and the copper weekly chart is at a D. I didn't do this, and I really should have, because perhaps at this 8 a.m. hour, we've got listeners who are not usually tuned in to my show at noon Eastern Time, the Tiger Technicians Hour. So let me just explain the Chapman Wave. It's a very simple concept that I developed 30-something years ago. Try to find the lowest low bar, merely count each successively higher peak. It must be a peak. When the price just keeps going high, it's called the floating ladder. When it makes the peak, it becomes the ladder. So that's leg A, peak A when it pulls back, leg B, peak B when it makes the peak, etc. And the fourth highest peak at peak D, uppercase on the way up, and it can even go to E, F, and G, but D, the fourth highest peak, is where so many charts, you've seen it right here for thousands of times in my, 13, 14 years that I've been here, TFNN. So the fourth highest peak is where you've got to become cautious. You lift your foot off the accelerator for a moment, you hover your foot over the brake, and you don't have to make any changes until you see the signs. In this case, the close under the 9-period moving average, especially 2 out of 3 sessions, consecutive sessions, the MACD going down, this is the MACD moving average, convergence, divergence, and the slow stochastic pulling back sharply under 80%. And there you are. Now, the weekly chart is still very strong in the MACD, good in the S&P at 87%, sorry, in the stochastic at 87%. So copper pulling back, at least in the short term, but short, it might be intermediate term. If it closes on Friday, tomorrow, under 2.94, then it's closing under the weekly 9-period moving average. That's something to keep in mind. So now let's go to the ESU7. So let's go to the ESZ. I've got to get used to that. ESZ, usually I change when I'm trading. I change at the very last minute because I got everything set up for the U contract September, but I've gone to the Zs. And the Z says, unless today we go to 2495.50 to continue leg C, or we go above 2495.50 to still extend the C. If there's no move above 2495.25 all day, then the consolidation that I spoke about for subscribers that we've been expecting for a day or two, even though we're along the Dow, we're actually only long positions at this particular point. We almost had a short position in the stock. I just don't want to really take a chance on that because it's such an incredible high flyer. It's a socioeconomic type stock that we're looking at. So we would have timed it perfectly the other day and had a 2-point gain, but I just decided I want my mind focused just to complete this up move, and then we'll make decisions if we get to a D. Let me explain. This is a leg C in the daily chart of the E-mini. It's at 24.9250 right now, down 3 points, 2.50. Well, 3 points from the high of yesterday. But the weekly kind of recycled to an E/B. I don't even want to make a decision yet about what it is because the stochastic is only at 73%, not at 80%, and the MACD hasn't even crossed positive. If it does that, you've got quite a lot to go on the upside. If it sort of fails from here, next thing you know, we've gone to maybe a D by, the earliest we can do it is by Monday, peak D that is. If we're suddenly sliding underneath 24.73, about 20 points from here, then I have to say, aha, maybe we've made a short-term top. And in terms of the Dow, this is the cash Dow right now. It hasn't opened. This is pre-market. 22,158 is the close yesterday. 22,180 starts a new leg, all-time high in the weekly chart, leg E. And the monthly chart, it extends the monthly chart. So the whole of September, you cannot get a peak until October. That's going to be very interesting. So a lot is happening. This coming week is going to be really important. Do you continue to see the weakness that I'm anticipating in bonds, gold, silver, copper? What am I missing here? With a rally and a spike in the, here we go. Let me show you. The yields, look at this. This is another one of those bounces off just making a slightly new low in the yields. This is the 30-year TYX. This is the 30-year T-bond yield. A big spike up from the low that was made at 2.651, 2651 last week, trading now at 28.01. That's quite high. I mean, quickly, that is. And you've done the same thing in the 10-year T-note yield, made a low last week of 20.34, trading right now at 22.06, and the 5-year is also traded last week at 16.18, 1.618, trading right now at 17.85. So we're going to be watching this closely, and if you look at the iShares, the Global Timber and Forestry ETF, it made a new high this week. This is incredible. Leg E, I'm calling it, but the home builders, the HGX, the Philadelphia Housing Sector Index, it hasn't gone to 287.13 to break to a recovery high. Instead, it's just trading within the up channel, like a ping pong ball, goes to the lower part, takes time, goes back to the upside, hits that resistance area and comes back. This time it hasn't gone above the 287.12 high of July the 21st. But it is acting quite well so far. So now let's get to nitty-gritties. You've got the Dow. I spoke about that. You've got the S&P, SPX, and the Dow futures are down 14. We're expecting some kind of a pullback starting late yesterday into today. We'll see what happens by tomorrow. So the S&P, the cash contract is in leg C to the upside. There should still be a D, and it's an F/B in the weekly chart. Monthly is really strong. All the monthlies are very strong. Another reason why I want you to go along. And I want you to give one more day before I start making decisions about the longer term. I had a question about, good question, is this where you can add to your IRA? And I'm thinking, yes, but you still have to be prepared for an 8% to 10% correction. But does it come from higher up? Good question in the den. S&P wants to know, what is your count on GBTC? Look at this. I spoke about 3 of my socioeconomic stocks that sometimes we trade them, sometimes we don't. We haven't traded the GBTC, which is Bitcoin. But I had a whole thing the other day when I gave a talk a Wednesday, a week ago, to the Boston Investors Group and the Investors Business Daily meetup for the anniversary party. I was the guest speaker. I mentioned that GBTC is making a peak F at 1,064.95. That was August the 31st. And I thought strongly that there was a chance that this H pattern, what I call the Chapman wave lowercase h, the dreaded H, will take out the left side low, and that there should be a pullback. And I said, you know what? We're at 1,000. We could easily drop 40%, 50%. Wow. 566 right now. That's almost a 50% correction in what? A week and a half? And it went to a peak D in the weekly chart and a leg E. I think Bitcoin is in for a little trouble here, shorter term. So that was the question. What is my count? My count is that it should test at 566. It should test this little area right here, the 528 to the 510 area is going to be key support coming up in the shorter term. Could have a little bounce now, but it seems to me lower lows and lower highs. At least in the short term, it's under pressure. Race, that is Ferrari, was my pick for a short recently, above 111. And then I said, nah, let's forget it. It went to 111.62 only because my mind was on the long side. And look what happened. It's at 108.80. And that same pattern of a peak D right there, 118.10 on the 6th of September, making the arch formation. Wow. If Ferrari goes under 105, I have to look at this market and say, wow, the wealthy are starting to hold back on buying their Ferraris. Leg F possibly in the weekly, but the monthly is only in B. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're back. So we're talking about my socioeconomic stocks. That's Ferrari, just to give you a sense of what I can't say they're really wealthy, because I'm sure there are a lot of people that buy it because they just love the car. But it's a sense of the discretionary income crowd. That's really what I want to be looking at. And then I also looked at Bitcoin, because this is really a new technology. It's going to have its serious bumps. It's going to have its huge moves to the upside. I think this is early in the game, and it's a game. And we'll see it at some point. The high was 1,064. I wouldn't be surprised if some point it's at 2,000, but I think it's going to pull back quite a bit first. Difficult to, I don't know if you can treat it as anything but trades. I'm sure there are people that are holding it. And you're looking at, and this is right now, it's 8:35, so this is 12:35 Eastern time. When this is replayed, so the market hasn't opened, but something came out, some news must have come out, because the futures went from -3 to now -6, kind of the pullback that we're anticipating, just a kind of a mildish pullback for the day, maybe going into tomorrow, before we can make another new recovery high, if we're going to get those Ds. The diamonds did make a D yesterday in the daily, but the Dow failed by about 20 points. It should do that soon. So the other one is Cintas. No position there. Often have positions, but we don't. It's way off. It is off, not way off. 139.74 was its all-time high on the 1st of August. It's gone into a kind of a flat sideways rectangle formation, and the weekly chart is at a peak D, daily D, weekly D, monthly leg D, and we'll see. Overall's clothing rentals are another socioeconomic bellwether for me. Used it for years and years, and it is trying to get, it's kind of struggling here, and that's why I have no choice that if we go to a leg D in the Dow and the S&P next week, I have to start looking to see whether, at least on the shorter term, do we want to be putting on any shorts. It's kind of what we do with D and E in the Dow. We usually do that, but I have to make a decision. Is it going to be a short term, or is this the time that we start to get a more serious 8 to maybe 10% pullback? I don't know yet, because of the rotation. Now, talking about rotation, so CTS at 135. If it goes to 137.5, that's very good action. It says it's trying to make a U pattern in the weekly to go to try to test the high. But if it fails, and at any point in the next 2 weeks it closes under 130, that's a hint to say mini slowdown in this area. Overall's clothing rentals, just be careful. Okay, made that clear. Now, I want to do something. I was asked about the XLF. We have, for the portfolio, for my subscribers, we are long the, not the XLF, but a bank stock, which has done extremely well. I wouldn't be surprised if today's a little bit of a pullback. Look at the single leg A in the S&P Financial Select Spider Fund. It's 25.59 was the peak F high. It pulls back to the 23.80 level. Bounced now to the 24.85, a point high, 5%, 4%, and the weekly chart is starting to improve, but it's not great, but it's holding quite nicely. My suspicion is that as the yields, I showed you the yields just a moment ago, as yields rally, they don't have to go all that much higher, but as long as they show some strength, that you're going to see the financials move higher in this, and that's this rotation correction. And why is the Dow holding better? Is because it's got 5 financials within the Dow 30. That's 20%, is that right? That's a big number. So we're looking at the financials and the rotation within the Dow, at least giving some support. Now, if you're looking at the commodity index, TRCCI, this is the Thomson Reuters Equal Weighted Commodity Index. Look at the strong move. It's gone to, right there, it's gone to a peak C. It should make the D. And the D should be above, I'll tell you right now. It's trading at 410.92 pre-market. And after the market opens, we'll see what happens. But if we can get to 413.42, just by the 200-period simple moving average, that blue line there, if it can get there, that's going to be a leg D. But it really helps the weekly chart to improve. And if you look at crude oil, here we go, crude oil, trading at up 64 cents at 49.94, challenging the 200-period moving average that was a barrier before, but now the technicals are better. It should take it out. We'll see if it can close above it, and that will really help the weekly chart because, I was saying it before, it'll go to a leg C above in the continuous contract, about 50.58. But the H pattern in the monthly chart is the big challenge. Why? Because it has to do with the Japanese yen, the JPY USD currency pair had, and that was to spiral sharply above the arch high of 58.62 made in December of last year. And that would be very positive. I don't know if it's going to be able to do that right now. So I covered, the XLF. IBB was a question. Yep, IBB is the biotech. This is the NASDAQ biotech ETF. It's just strong. I've never seen the IBB spike up and then hold so steady for 1, 2, 3, 4, 5, 6, about 7 or 8 sessions in the daily chart without breaking, in this case, 336. Why do I have 72? 336.25, that's what it should be. 336.25, the last high, significantly, to say that it's making this leg up, which would be a leg C. Instead, it's held here. If it's using up energy, usurping energy, and unable to break out into the 340s by Tuesday of this coming week, all I can say is watch out, because it could start a pullback. If it closes under 328, just 6 points lower, that's going to be a big negative. That'll impact the MACD and stochastic are very strong. We tried to go long. We took a tiny little loss. And then I said, this is it. It's just struggling. It should not have struggled. It should have quickly either double topped and pulled back or broken out. Instead, the sideways move says, you know what, the biotech crowd don't know whether to buy or to sell. They just stuck. And look at this, leg F/D in the weekly chart, leg D in the monthly. And I've got Chapman Wave 5 that says at some point, the iShares NASDAQ biotech should start pulling back sharply, going back to the 310 to 300 level. We'll see what happens, but I'm not in no position. I'm just let it play out. Now, SMHs. This is the S&P, Market Vectors Semiconductor ETF. Look at the strength. That held, and then it broke out slightly. So the monthly chart had a high of, in the week of 9th of June, at 89.72. Pulls back, and now it's making this kind of a rectangle formation where it goes to just under, right on, or just over the previous high, and that should be at 89.70s. But in fact, what we've gone to is we've gone to the 89 right here. The high is 89.74. So this is now an alternate count, but I have to wait. It's very difficult because I want to see on Friday, it's a weekly chart, whether the MACD crosses positively. If it does, then if you look at AMAT, Applied Materials, which is really a nice bellwether, Applied Materials should be breaking to the upside in 46.02. It needs to get to the 47.70s. Shouldn't be a big deal if it's going to be running sharply. In leg D right now in the daily, still hasn't gone above the peak F. So I'm watching a lot of things right now to say, do we have another phase to the upside? Or is this a kind of a topping area where we finally get that 8%, 10% correction? So far, the rotation says no. We're just rolling away from the Googles, etc., and we're going into other areas like the financials, etc. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, everyone. Welcome back. So this is pre-market. This is now it's 9:15 Eastern Time, 4 hours. Yeah, so this is 1:45 in real time. And the Dow futures are down some. You've got the, let me just move this away. Give me 1 second. Okay, so what you've got is that the Dow futures are down about 34. The S&P futures is down 6.50. This is the 120-minute chart that I showed subscribers this morning. I said the rectangle formation can last a lot longer than your patience. Watch 2488 to 2487 support and watch 2495 resistance. And we've got a peak G in the daily, in the 120-minute chart, probably a peak C unfolding in the daily. And there should still be a D coming up over the next, by Friday or Monday, a leg D. And the weekly chart is still good. And then if you look at the 10-minute chart, this, of course, is, by the time you see this, you'll have been trading on the 10-minute chart 6 times 4 for 24 bars. So all I can say is we're at 2487 right now. So there should be somewhat of a pullback. I'm thinking that 22,130s was the initial support in the Dow cash, and then the 22,100 is going to be the test of very strong support, 22,020 to 22,000 round number. Okay. So the E-mini is getting a little close to some kind of a bounce right now. I don't want to go into that because it's going to be replayed, and that would be silly to be talking about something 4 hours hence. So now let's look at something else. So I was asked about the XLF, the IBB, the SMHs. The SMHs say that there's still some residual strength. What's really interesting here is that the VIX index, the VIX trading at 11 up 50 cents, is way off the low of 8.84, yet the S&P and the Dow are making all-time highs. What is the New York Stock Exchange doing, NYA? Because that's a much broader 2,000 stocks. That's in a leg D. So we're getting very close to where you're going to start to see some kind of hesitation. But I believe that so many people have been scared out of the market that it's going to give good support, really good support on any major pullback. If there isn't news that the market is anticipating will be negative for the market. So you cannot have the VIX rallying without bad news accompanying it and holding the bad news consistently, persistently, and so far we haven't really got that. The market's not interpreted any of the news, but we've seen a lot of these V-shape or these cup formations, and they can be extremely powerful if they go past the left side high, close nicely above the left side high, in this case peak D, once again a D in the New York Stock Exchange daily. And what we're really looking at is next week, how do the weekly charts hold? Do the MACDs finally cross positive, and the ones that have been weak at the price, which is the arbiter of the trend, keep going higher? This is F/C, I'm going to call it for now. In the weekly chart, if this is only a C, we've still got higher highs to go in September. So this is going to be a fascinating period. Why didn't I want to go to the short side and then add to the short side? I'll tell you why. When you see the rotation, if there wasn't a rotation into the financials with the SMHs, the semiconductors holding well, if you look at the QQQ series, you've got Apple inside there, and Apple even hardly gave back anything yesterday. And here you are at 145.72, down 70 cents. Look, you've got a cup. You've got a little handle here. You could go back into the handle, making 144 incredibly important support over the coming week. But the weekly chart, here again, you've got the MACD not yet crossing positive. The stochastic good at 79%, not great, but it's good. But the price is at almost at all-time highs. Let me move away. Look, A, B, C, D, E, and then F in the 120-minute QQQ chart. Why did I say to subscribers we can expect some kind of a pullback today? Because in my 120-minute chart, we went to a potential Chapman wave 5, a potential peak F. I put F/B, but I said there'll be an F if there's a sudden pullback of more than, say, 30 points in the Dow. And that's just a 120-minute chart. And that 120-minute chart has really good MACD and stochastic, so it would be a price move to the 22,101 9-period moving average. That's the real test. Do we close much lower, 80 points in the Dow, 11 to 12 points in the S&P, or do we have an intraday pullback and then slightly higher highs, and we close down but not down all that much? That's going to be a big test. The Dow 120-minute chart suggests that 22,101 is the 9-period moving average. You have the Chapman wave. You see this channel here called the Chapman wave inside track repellent or resistance area. There it is. But you've already made this kind of an arch, cup formation. Having gone from the arch to the cup, you've broken above the left side low. Left side high of 22,085 made twice at 11:30 and 1:30 on the 16th of August. Comes all the way down to the 21st at 21,600. Nice rally. So this is going to be a test of a number of different things. Now, before we run out of time in this particular section, what I did want to show is, I will show my subscribers the daily Dow in two different formats. One is like on the left, you have the 120-minute chart with certain moving averages and the Chapman wave notation of both the peaks and the troughs, and the Chapman wave 5. And in this particular instance on the right with the MACD and stochastic, the daily charts show the cup, a beautiful cup formation, left side, right side price time match, has until tomorrow to make a new recovery high on this one. But I gave you a little room. I didn't have a plumb line at exactly the low. Therefore, you have to choose. I have a technique that says you can choose a different candle for your plumb line, the midpoint. And in this particular instance, it goes until the 18th of September to get to 22,179. Here, it's the same chart, but just a slightly different technique. This one uses the Chapman wave inside wedge target resistance line. This one uses the Chapman wave inside track repellent cell zone. So it extends just a little. It's shorter, and it goes to the 14th of September. That's today. I don't think we'll make a new high today at this particular rate. Okay, so now a couple of things that I wanted to talk about just as we're about to wrap up this particular section is, so within the context of the market, if you look at all the different indices, now let's go to the IWM, only in a leg B. I call it a gray B because it is underneath the previous major high, and that was a high of 144.35 at a peak E, but that made a Chapman wave 2-bar reversal. These are all Chapman wave. These are techniques that I've developed, proprietary techniques, although I discussed them out in the open, but they were developed by me over many, many years. This is what's called the Chapman wave 2-bar reversal on the 25th and 26th. Or was it a 26th or was it a weekend? Yep, 26, where you go from 144.35, in this case, an all-time high, and the very next session has a fractionally lower low, 144.15. Chapman wave 2-bar reversal when the MACD crosses negative, stochastic turns down, and you're at a peak DE or an F. Wow, look at that pullback. 144 to 132, and now we're back at 141, almost 142. Well, it's at 141.61, down 31.5 cents. Nice action. Look at the V-shaped recovery. We'll talk about that when we get back. Basil Chapman, pre-market, and just on 9.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So pleased to see Steve Rhodes in the den this morning. Had trees and limbs and power lines out and everything. It's been real tough. Hey, Steve, if we can do anything, just give us a yell, and welcome back. Good to see you. So we're looking, this is pre-market. This will be almost 1 o'clock when the show is rebroadcast, but it's just before 9 o'clock right now. This is what I'm looking for. I'm looking for some kind of a pullback in the Dow and the S&P and many of the indices. Just a brief pullback. That's what I'm thinking, brief pullback. But by early next week, we start to make a new recovery high in the Dow and the S&P for that leg D, the missing leg D, having a cup formation, how both the indices close above the left side highs, in this case for the Dow 22,179, is going to be absolutely imperative to analyze, because either there's a double top or there's a Chapman wave cup and ladle breakout pattern. So let's just see how this plays out. In the meantime, we are long. We are mostly long. We're only long in our positions, and a mix all over the show. I mean, think of what the autos have done. Look at this. This is FCAU. This is Fiat Chrysler holding well up there. It's in a leg peak E at 16.46, having run all the way from the 11s. There's a five-point gain. I mean, that's a 45% gain. The weekly chart's very strong. Look at Ford. Ford had a nice sessions in a leg C, maybe a peak C, but it's pushing higher. General Motors, fabulous move up to the 38, trading at 38.13 right now. We are actually long GM, and this is nice stuff that we're looking at. So even a pullback there again, you've got the cup formation about to test the left side high in the weekly chart of 38.55. So let's just keep it simple. Right now, I'm believing that the bonds will be pulling back with gold, with silver. This is on the shorter term. Crude oil should rally, the markets should rally, and yield should rally, and crude oil should rally. So, and copper should be pulling back as well. Keep it simple, and thank you for being here. This is a pre-recorded show, and I will be back live tomorrow. Have a great day.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi folks, this is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.